Let me start with a single best chart, which Peter Hooper knows oh so well. Robert Sinch of Amherst Pierpont's the one that nudged me towards this chart. In the background is the Fed funds target rate. It's legged up here. Recently, we adjusted for inflation. And the shocking 10-year moving average of the real Fed funds rate has come down and down and down. And the conundrum here 5, 6, 7 years ago is this movement to negative real funds rate. They desperately want to nudge this into positive territory. What happens the day that Chair Yellen gives us a positive Fed funds target rate? Good things happen, right?
Well, if we get there in the reasonably near future, as the Fed is projecting, as the market is not believing, that's a sign that the economy is going to be doing reasonably well.
I want you to push against the doom and gloom crew. Last Friday, they were out in full force. The world's going to come to an end. A guy as pro as Sri Kumar says, look, you're still going to have tepid GDP. But come on, if they raise rates, my economics is there's always a first or maybe second order condition. That's a good thing. Am I right?
Look, if they don't raise rates quickly enough here, as fast as they are projecting, if they slow down as much as the market's anticipating, I think there is a real risk they fall behind the curve. This is why they're messaging, look, we have to get on with this process. This is a historically slow rate of ascent. The Fed has never been anywhere near this slow in terms of raising rates. So, but this is a market, I think, that is not used to the kind of action that we've seen from the Fed in the past.
Peter, do you worry about a temper tantrum? So the Fed has been signaling this for quite some time, the fact that they're ready to normalize. Markets have largely ignored that. Do you see, when they actually start, if it's not fully priced in, do you see kind of like market schism or volatility?
I think people are accepting the fact that the Fed is going to be tapering later this year. This has been laid out abundantly clearly. I mean, we've had a number of key communications along the way, the latest at the June FOMC meeting, making it very clear that this is happening. It's going to happen with a whimper as far as balance sheet normalization. The very slow process for the Fed goes there. I think the surprise will be that we get another 4 rate hikes over the next 12 months.